Hello guys, it's your boy Forex FX here, Focus FX Academy, and today I'll be taking you through liquidity concept by the smart money. But before we get into that, today is a Monday, and being Monday, I don't usually trade on Mondays. I have my reasons, and I'm going to spill it out to you. But today there are 3 trades I did take. I took a trade on GU, NZDUSD, and gold, and I got stopped out on two pairs, that is GU and NZDUSD. Yeah, I got stopped out on those 2 pairs, and I had shared these setups with those guys in my free Telegram group. Yeah, by the way, I'll post the link below this video. If you're not yet enrolled, or if you're not part of that family, then that is an opportunity for you to join us in that free Telegram group. Yeah, before we get into all the topics that I want to take you through today, first I would love to urge you to subscribe to this channel. Leave a leave a like. If you like this video, just leave a like and subscribe to this channel. Click that notification bell so that whenever I upload new videos, you'll be the first one to get notified. Yeah, so now I said I don't trade on Mondays. Why is it that I don't trade on Mondays? It's not just on Mondays, but Mondays and Fridays. Those 2 days I never take any trade. Why? The reason I don't trade on Mondays, it's because Monday is a slow day. Monday is a slow day, and there's no clear cut-out rule to avoid trades on Mondays. This decision mainly depends on what type of trader you are. The main reason why I don't trade on Mondays are low volatility, unpredictable market conditions, and less number of traded volumes. Monday to me is least volatile day to trade the currency market because the market is static, and even a good trading strategy can fail on Monday because the market trend is not confirmed on this day. It's a reality that Mondays and Fridays are different from other weekdays. The better way to stay in the market during these days is to expect little and trade low volume. However, it's also the fact that not all Fridays are slow. Other Fridays are very, fast in terms of price movement, in terms of volatility. There's high volatility. So Fridays varies, but Mondays, man, you just have to stay away from the market on Mondays. Now, that's rather those are the reason why I don't take trades on Mondays and Friday. Now, as I said earlier, I'll be taking you through liquidity and manipulation concept used by smart money. So, what is liquidity? Most traders don't know what liquidity is. They don't have this knowledge or this information, and they end up being victims of lack of this knowledge. And when you know the concept of liquidity, its role in the market, then it scales up your trading game. Now, what is liquidity? Liquidity has many names. Others call it manipulation or whatever. It has many names, but to me, I usually say that liquidity is the buildup of stop orders residing on a trend line of equal highs, lows, trends, or wicks created by smart money to lure retail traders into the wrong side of the market to take out their money, which is in form of stop orders, in order to fulfill their many orders. You should know that there are two type of players in the market. They are retail traders and smart money. And most of the times it's smart money that, you know, they control the market. They control the market. If they decide that the price should just, you know, fall or rise, then that's what they'll do, because they trade huge volumes in the market. And for them to trade these volumes, they need liquidity from retail traders, from me and you. These institutional traders, they need liquidity from small traders like me and you, retail traders. And most retail traders don't, since they don't know this concept of liquidity, they end up being victims of this liquidity. They get taken out of the market, you know. Have you been in a situation whereby you place a trade? Okay, you have a very, you know, you have your own setup which you are confident in. You place your trade, you place your stop loss, you at any level that you want to place, and the price taps into your what can I say? It taps into your stop loss, then it pulls back, or rather it continues going with your directional bias, like the direction that you had predicted that the price will go. Have you ever been in that situation? You place a trade, then the price pulls back, or rather goes and hits your stop loss, then you get knocked out, or you get knocked out of the market by the smart money, of course, and the trade or the price starts going to your directional bias. Then you're like, why does this always happens to me? Now I'm going to tell you why it happens to you. Now, like I said earlier, liquidity is a build-up of stop orders residing on a trend line of equal highs, lows, trends, or wicks created by smart money to lure retail traders into the wrong side of the market to take out their money, which is in form of stop orders, in order to fill their many orders. Now, this, or rather, liquidity, where can you find liquidity? Liquidity, like I've said, it can be found on equal highs, equal lows, and on trend line. Now, I had already drawn some of the structures here, highlighting where these liquidities are found, you know, just to save on time. Now, as you can see here, that is a triple bottom. Now, liquidity, or rather these stop orders or sell stop orders, are usually the stop loss of retail traders. They usually place their stop loss below below that triple bottom. As you can see here, we have a triple top stop loss. Retail traders place their stop loss above that above that triple top. Same thing here on double top. Retail traders will place their stop loss above the double tops. Then we have this this ranging trend. As you can see, the retail traders will place their stop loss below it and above it. Those who will place below it, those are buyers, because they're expecting the price to buy when it hits the support line. And the sellers will place their stop loss above the resistance line, because they're expecting that the price will fall once it taps into the resistance line. That's why I said earlier that this liquidity can also be found on trend line of equal highs and lows. Same thing here, same thing here on a double bottom. So this liquidity, these are traps, manipulation created by smart money. And these traps are often found in the market due to the amount of retail at play by the smart money. If you just look at this bearish pennant here, you know, we have a demand block here, or bullish order block here. Then the price makes this impulsive move upwards. Then it starts ranging in this zone, creating a pennant, a bearish pennant in the process. Now, retail traders, those who place their stop loss below the support and above the resistance, will place their stop loss here. These are buyers. They've placed their stop loss just below this. Sorry, let me just zoom. They've placed their stop loss just below this support line, and the sellers have placed, buyers have placed their stop loss below this support line, and the sellers have placed their stop loss above this resistance line. Now remember, liquidity is lying above and below these two trend lines. Now, because the smart money, they have their orders here. They have their orders here. Like I said earlier, liquidity traps are formed often in the market due to the amount of retail at play. Now, smart money, they have their orders here that are not yet activated. They have their buy orders here, which are not yet activated. And for it to be activated, they need to take out these small traders, these retail traders, take out their stop loss, get enough liquidity to push price to their order block. So they'll take out the sellers here, the stop loss of sellers, then the price will go and tap into their demand zone. Then the price makes an impulsive move upwards, taking out sellers in the process. Remember, here they took out buyers, now here they'll take out sellers with this impulsive move upwards. So you see, this is one of the reasons why you should avoid trading at these zones. Retail traders don't know this. Most retail traders don't know this. Always avoid these zones. They are traps. I understand, they present a very enticing opportunity, but they are traps created by smart money to lure unsuspecting retail traders on the wrong side of the market. Take them out of the market, grab enough liquidity to drive price to their orders, tap into their orders, activate their orders, then takes the price to their prevailing direction, or to any direction that they want to take the price to. Remember, I told you, smart money have control over the market. Retail traders don't have any control over the market. What? Yeah. What the fuck? So now that you know how smart money works, I've said, or rather, liquidity. Now that you know how liquidity, what is liquidity, the concept of liquidity and manipulation, those traps, where those traps are located. Now it's upon you to avoid these traps. This is a triple bottom. This is a double top, triple top. This is a ranging market on a bearish trend. Then we have a ranging market here. Some consolidations, consolidating here. The stop losses have been placed above and below the trend lines in these zones. Then we have a double bottom here. So that's how liquidity works. I've tried to explain it in a slow manner so that you understand it better. Yeah, because this concept, it's difficult to understand when you come across it for the first time, but I've tried to explain it in a way that you can easily understand it. Now I'm going to show you the trades that I got, the GU and the NZDUSD trade, which my stop losses were hit, and I got taken out of those trades. Remember at the start of this clip, I said that today, being on Monday, I took 3 trades, going against my trading plan, which is I don't trade on Mondays and Fridays. And this is a lesson to you guys. If you have a trading plan, stick to it. Stick to it. Stick to your trading plan. Because once you go against your plan, then that's when you start seeing things not going your way. And another thing I wanted to mention is that losing is part of trading. Losing is part of trading. The main reason I'm making this clip, it's to show you that I also incur losses in my tradings. There's no trader who has a winning streak of 100%. No. Ask any trader to show you their winning streaks and their losing streaks. The trader who will show you only their profitable trades, then that person is lying. Losing is part of this game. Losing is part of this game. And if you're not willing to lose, then you are in the wrong career. Now, let me just go and show you how I got stopped out of 2 trades with accurate setups. Remember I said on Mondays you may have an accurate setup, but on Monday your setup may fail to hold because it's a Monday, of course. Now, we're currently at NZDUSD chart, and as you can see, this was a trade, this was my order, and I got stopped out. Now, there's this common saying that goes, spot the liquidity or be the liquidity. Now, today I became a liquidity. I will show you how. Now, when identifying order blocks, there are 3 questions that you need to ask yourself. Like, there must be some liquidity sweep or inducement in the impulsive leg. I'll show you. So, if you can see, this is trend line and there is a liquidity below it, so we call that liquidity, trend line liquidity. Now this liquidity was taken out here. Remember, these are buyers liquidity. It was taken out, or they were taken out of the market by this move, this 3 bearish candle move below. It took out the stop loss orders of these buyers. Now, after taking them out, now remember, you are still figuring out which other block that you're going to take a trade on. Now, if you look on the left side of your screen, you'll see that the trend was a bearish trend until at this level where there was a formation of choke signaling a change of trend direction. Now the price started creating new higher highs and lower lows. But the price, this lower low broke the previous higher low, signaling a change of direction. Now, this was my OB. because the price uh, changed character here, leaving behind an order block. Then it left behind an imbalance or an area of inefficiency, or you can call it fair value gap. So I was expecting that the price would come back, fill this inefficiency here, of course after taking out the stop loss orders of these buyers, then come and fill this imbalance here, tap into my order block here, then it shoots up. Let me just indicate with an arrow here. Then it shoots up. Those are the reason why I took these trades, or why I set my pending buy limit here. Now, why was I taken out? Because if you just look on your left side of the screen, you'll realize that my OB was on an area of liquidity. Let me show you. There's a trend line here. Yeah. See? Where these lows tap into this trend line. Then it, after tapping into this trend line, the price pulls, goes up. Then it comes here, tap into this trend line at this level. Sorry. Let me just zoom so that you can see. So the price came, it touched this trend line, bounced, then it pulled back, retested this trend line here at this level, then it made an impulsive move upwards or upward, creating an OB, a bearish order block in the process. Now, what I failed to realize, it's that there was liquidity lying here. There was liquidity lying here that I didn't notice. Now, another thing you need to know, it's that the price is not always going to respect your setup, no matter how accurate that setup is, because of the manipulation in the market, because of constant manipulation by the smart money in the market. Now, they cleared this liquidity here, came, tapped into this other block. This other block failed to hold, took out the liquidity lying below this order block, because they knew there were buyers who would place their stop loss just below this order block. Now remember, stop loss, these are just liquidity. Why can't I here? So all this zone, there's liquidity. Just push here. And what did the price do? Price came, took us out, just like that. Now, I'm going to show you similar thing that happened on GU. Now, another thing I want to mention here, it's that GU and NZDUSD, they have a positive correlation. They tend to correlate positively, because if you can look at that structure of NZDUSD that I've just closed a few seconds ago, and you compare them with this structure, like you'll see that they are almost similar. Same thing that happened there, it's the same thing that happened here. Stop loss here at this trend line, liquidity taken out, stop loss of buyers who were buying at the support got taken out by smart money. So I was expecting that the price would pull back after clearing this liquidity, that the price would fall, rebalance this inefficiency here, to balance the market, because you see there's an imbalance here. There's an imbalance here. So I was expecting the market would come, fill that imbalance, tap into our OB. Remember, after it has cleared the liquidity that's lying below this support line, come get smart money. They'll have accumulated enough liquidity to push price to come and rebalance this area, because it's only buyers that were in the market at these zones. Now it came, yes, it did rebalance, tapped into our order block, but what happened? We got taken out, or I was taken out. Why? Same reason as I've shown you on the GU. Look, I can just extend this trend line. So on normal retail traders concept, they buy at the support. Now this is a support, so they place their stop loss just below it. So if I can just clone this liquidity and put it below here, so you see this is a pool of liquidity. There's a pool of liquidity lying there's a pool of liquidity lying below our order block. That's why I was taken out from these two trades. And also, like I said earlier, today being a Mondays, your trade setups may be accurate, but they may fail to hold. That's just how Mondays are. Mondays and Fridays. So that's why I was taken out of this trade. So I told you I took 3 trades today. Got taken out from 2 trades, but one did respected my analysis. That is gold. Now this trade, I did win it. I'll show you. So as you can see, we have extreme OB here. Okay, I cleared some of the highlighted zones on my chart, because I make your chart as neat as possible. So I had placed my entry. I had 2 entries here at the week and at the 50% of my OB. Now at the week level, I don't know, the week level was 1879.40. That was at the week level of my OB. Now the 50% level was at 1882.45. That was at the 50% level. Now when the market opened, it did tap at the 1879.40. That is the entry at the week. So as you can see, it was a sniper entry, but that other entry at the 50% was never activated. Overall, it's a win. And that brings the end of our session today. Yeah, so I've taken you through liquidity concept, the manipulation by the smart money, how to spot liquidity, and how to avoid those traps. I've explained to you in details how liquidity works and the powers of liquidity in the market. So whenever you see these setups from these double tops, triple tops, triple bottom, triple top, avoid those avoid taking trades at those areas. Avoid, as much as they seem to present a good opportunity for you to capitalize in, avoid those areas because they're just traps. These are traps set by smart money to entice you on the wrong side of the market, to trap you, take you out of the market by tapping into your stop loss, taking you out of the market in the process. Then they get enough liquidity to drive the price to their unactivated orders. Then once they activate their orders, they take the price now to the direction that you head for. So this manipulation will always be there. And also I've told you and explained to you the reason why you shouldn't trade on Mondays and Fridays. Let the market form on Mondays. Let the market play out on Monday. Then get into the market on Tuesday, Wednesday, Thursday. Take a break on Friday too. Not every day is a trading day. That's my point. Not every day is a trading point. Is a trading day. And as you've seen, you may have a perfect setup, but you end up being taken out. My point is, your setup won't always work for you. It won't always work. There are days that your setup won't work. And when that happens, it doesn't mean that you are a bad trader or you don't know how to trade. No. Sometimes you just have to understand that the price won't always respect your setup. And that's okay. That's okay. You keep on learning, you keep on growing. And losing is part of this game. Losing is part of this game. Show me a trader who has no lost trades, and I'll show you an elephant that can fly. Yeah, so guys, that's brings the closure of this video. If you haven't subscribed to this channel, kindly do so. Leave a like on this video, subscribe to my channel, click on the like button, click on the notification bell so that you always get notified whenever I upload new content. And yeah, so until then, guys, take care, be safe, and may profits or pips be with you.
Wait a minute!